volatility comes victory. Market screaming, headlines full of doubt. I zoom out, that's how kings are mapped out. Short-term noise can't shake my core. I've seen 3 cycles, I've survived the war. They want signals, I want strategy. They want fast, I want mastery. Charts don't lie, emotions do. That's why most fall and a few break through.
Stand your ground through the crash, through the sound. Crown don't drop when the price goes down. Bitcoin wears it world renowned. Hold on, fold, stand your ground through the crash, through the sound. Crown don't drop when the price goes down. Bitcoin wears it world renowned. Bitcoin wears it world renowned. Bitcoin wears it world renowned.
Pressure creates precision.
Hold on, fold, stand your ground through the crash, through the sound. Crown don't drop when the price goes down. Bitcoin wears it world renowned. Hold on, fold, stand your ground through the crash, through the sound. Crown don't drop when the price goes down. Bitcoin wears it world renowned.
Bear market forge, pressure test separates noise from the best of the best. Paper hands exit, stories get thin. Builders stay, that's where kings begin. No hype trades, no hero calls. Just structured plays and protocol walls. Stack the edge, repeat the plan. That's how empires expand. Time and market beats the chase. Patience always wins the race. While they sprint, I architect. Slow precision earns respect. Zoom out, see the frame. Every cycle, same old game. Fear and greed, repeat the song. Only the disagreeing last long.
Whispers turn to future shock. Doubt turns into afterstock. History favors those who stay when others choose to run away. Through the night, through the red, through the voices in your head. Stand your line, don't let go. Storms will pass, kings will grow.
No shortcuts carved in charts of fire. Only structure lifts you higher. Every scar becomes a guide. Every drawdown builds inside. Legacy trades, not lucky hits. Process built in layer bits. When the next wave hits the sky, prepared minds are first to fly.
Hold fold, stand your ground through the crash, through the sound. Crown don't drop when the price goes down. Bitcoin wears it world renowned. Hold, stay cold, read the flow.
All right, legends, welcome to another day, another opportunity, another trade. Can we nail another trade with good risk management? Can we make some money off the markets, scratch a couple of dollars? Welcome to the live stream. Remember, if you have not tapped that little like button just as yet, please do so on your way in. Let's do a little bit of technical analysis here in the morning on the channel. In the morning, I do the morning updates and Andy does the afternoon updates. Loads of shorts that's going out, some summary videos that's going out. So you guys will see there's a lot of content going out at the moment. And hopefully we can keep up the pace. We just want to push out content, grow the channel. And obviously, you know, hopefully create a community that is successful, prosperous, and can trade with great risk management. As always, I have to put the disclaimer out there. I am not a financial advisor. I am just a dude here on YouTube showing you from an education perspective how I do technical analysis, and hopefully you can learn something and apply it to your own trading methodologies and trading plans. Okay, legends, let's get into the technical analysis. Well, yesterday not much has happened, guys. Not much has happened. Yesterday we were, let me just switch my magnet off. Yesterday we were here somewhere, and now today, okay, we are still here. Okay, nothing has really changed. We have not moved dramatically to the upside, nor have we fallen to the downside. So let's discuss the probabilities, because yesterday the probabilities were higher still to form a higher low and get continuation to the upside, to come and claim this high and this high. That's basically how I ended off the live stream. And now the question is, has probabilities changed? So a couple of things I want to share with you in this live stream. Guys, I'm still in my trades, okay, from a transparency perspective. I'm still in my short, I'm still in my long. I've taken both profits on both of these trades. So, and right, and I want to discuss some probabilities over here, because if I had to have my way as a technical trader, I would actually love to be stopped out from this long. Okay, but I might not get my way. And this is why I still have the long open. I don't want to close this long just as yet, because I do realize that there's a specific level, as per the thumbnail, that needs to be claimed to give the bulls higher probability that we are going to move up and claim this high. Okay, even this high. Okay, let's just say there's a level that needs to be claimed to give the bulls higher probability. Obviously, nothing is ever guaranteed in the market, but there's a specific level that I want to point out today, that if that level gets claimed, there's a higher chance, probabilities starts increasing significantly, that if that level is claimed, even with a pullback, you're going to get upwards momentum to claim the highs. So I want to talk about that today. Okay. I saw some comments from people saying that that must be an AI song playing here in the background. No, my brother produces all the music that you hear on this channel. Sometimes it's me singing, sometimes it's my brother rapping, sometimes it's his wife, sometimes it's someone else. We have a family full of musicians. Okay, let me just put it that way. My brother is a music producer, so he made me that song for the YouTube channel because it speaks about volatility, risk management, Bitcoin, all the beautiful things. Okay, right. I will go, as you know, just to make everyone aware, I will focus for now on the technical analysis so that people rewatching the live stream can get the alpha, all the, the juicy parts, and then I will go through the comments after I'm done with the technical analysis. Okay, maybe I'll restructure it later on, but for now, that's the structure that I want to stick to. But I do see the people here, Fat Sonic, just kidding. I knew it sucked too bad to be AI. It sucked too bad to be AI. Wow, right. I'll give my brother the feedback. Community doesn't like the song. Okay, Mr. Scalpstronaut. Welcome to the live stream. I know who you are. Okay, we've been talking. Super Dewald, goeiemorgen. Mitra Ferray. Welcome to the live stream. Okay, guys, let's get into the meat and potatoes. Okay, let's do some technical analysis, determine those high probabilities. And oh, by the way, I did open, not big enough, but anyways, it's a trade nonetheless. I did open up a long here on my BTCC account. Remember, guys, if you want to trade with these exchanges where you get the best deals and bonuses, BTCC, 30% cash back on the money that you deposit in your features account, it's an amazing deal. Okay, and I will talk about this trade. And this was a Mr. Andy trade over here. I was just like, well, Andy, if you can take the shorts, okay, that I'm pointing out, I can also take the longs that you are pointing out. Currently, price is getting some upwards momentum, and I've purposefully protected my position. I'm going to trade this a little bit different because, I know that Andy has a specific plan in terms of how he wants to trade this. I'm going to trade it a little bit different. I've already protected position. And if I do get stopped out, I will look for a new long. That's just my style of trading. I would rather get stopped out and look for a new long. That's how I'm going to approach this trade. Okay. You might approach the trade and say, well, you have a stop loss below the low and you build a position. Nothing wrong with that. The biggest problem I see with people doing that is they go in too heavy. Okay, they open up a 10% position over here of the entire capital. They add another 10%, they add another 10% or 50%, or I don't know, people go crazy. And when the trade turns against them, you've lost 50 or 60% of your portfolio. That's not, and this is why I don't like specifically to highlight trades where you have to build a position, because people get irresponsible. But nonetheless, it is a safe way to get into a trade if you can manage your position appropriately. But people, anyways, guys, I know that you are all responsible, because the one thing I do realize is that you watching this live stream right now, okay, you watching this live stream right now, you are a die-hard trader. You are here when things looks at their worst. You are not retail. So you are most likely a trader that knows the rules, that knows your risk management, that know that you shouldn't go in with your whole portfolio at 100% X leverage. I think those people that do that are not here. Okay, and that's the people we want to take profits into. Unfortunately, that's how the market is designed. Basically, the dumb money is not here. High chance that everyone watching this live stream is smart money. You want to master this game. You want to master technical analysis. You know how to protect and manage your risk, okay, or your capital. So now that was my little spiel for today. Now let's get into the technical analysis. Right. I will go, Devil, can you start a series during this bear market where once a week you talk about spot accumulation and strategy to build a spot bag for the next bull market? Then we can see its performance. Oh, that's not a bad idea. Play that song and vibe again. Tried that long, got stopped at break even with that double bottom. Yeah, and I think, last night, and this is what Andy said in the community as well. Andy already dropped a nice little voice message this morning. For those of you that are not inside of the community, there's lots of updates. We keep, we try our best to hold people's hands, what we see, how we manage our risk. And I guess my biggest thing here is I'm not a signals provider. Okay, I am not a signals provider. I'm not going to say, guys, this is where you enter, this is where you take profits, this is where you put your stop loss. There's many signal groups out there. I try and show people what I do, how I trade, how I manage my risk. If you want to jump into those trades, it by all means, but I'm showing you how I execute trades so that it teaches you how to do it by yourself. Not just an entry, an SL and a TP, and you don't know why you took the trade. And I think that's the biggest issue with signal groups out there, is that they don't teach you the why. So they help you catch a fish for a day, and that's it. Okay, if they teach you how to fish, you can eat for a lifetime. Right. Anyways, guys, there was a couple of scenarios, but Andy also posted here, he's basically getting, so, Andy posted that, he's building a small little position. He got in with a small amount of his capital, most probably 1% if I know Andy. Okay, he most probably got in here with 1%. I also went in very small, guys, because my plan last night was also when we were trading over here, okay, or when we were trading over here, I can't remember exactly, but in this zone, I was also like, okay, I'm going to, build a position. If we take the low, there was a very interesting level here that I was watching. So I want to put, a little bit of capital, I know exactly where to put my stop loss. And if you get stopped out, so be it. Okay, I will lose 1 or 2% of my capital because I'm managing my risk. If it bounces, well, happy days, right? I'm in a bigger position now to benefit from momentum to the upside. So hence I'm in a small position here because I didn't go aggressive. Okay. I'm still in my BTCC trade, and this is where I make most of my cash, or my bluff and trade. Sorry guys, my bluff and trade. Links down in the description. And also remember, if you do want to be part of the community, DM me the word access on Telegram to get free access to the community for 60 days. Okay? Amazing deal. If you're not yet part of the community, this is this is where myself and Andy spend most of our time, because YouTube is only an hour or two a day. So guys, now we can count this structure. Okay, let's just do a little bit of a 1 hour time frame analysis over here. We can count this structure as a 5-wave structure. Okay, 1, 2, 3, 4, 5. you could then say, okay, well, if this low is protected, okay, we're not going to come down here. We can count this as a 5-wave structure. Beautiful. So it's an impulse. And this can all still be part of the correction for this impulse, just trying to keep it simple. And you can continue to the upside. And maybe this is A, that is a B, okay, and now you get a C here to the upside. Or this is a 1, this is a 2, this is a 3 to the upside. Okay, you guys get the point. So there's a chance for the bulls for upwards momentum. Definitely. And I think we've been focusing on this little structure because this is where it gets very, very interesting, and I will dive into that structure in a moment. A couple of people actually asked me the question, and I just want to go through this, is to say that, Dewald, can this be the end of something? Can this be the end where the low is protected and we're not going to get there again? And we absolutely fly to the upside. Okay, I don't know what fly means, how high we're going to fly, but yes, it's not pretty, but you can count the end of something here. This could either be an A, B, C. It's a 3-wave structure, and you can build a larger 3-wave structure to the upside that even goes and claims $92,000, $93,000. Or you can count this not pretty as a 1, a 2, a 3, very short 4, and a flat, and a 5. So you also can count this as a 5-wave structure. This is not pretty as a 4th wave compared to how long the 2nd wave is, but it's not an invalidation, guys. Okay, it would be better to see a 4 and a 5. It's just more common. But yes, you can fit a 5-wave impulse here, and then you can get a larger corrective structure, either correcting the impulse or just continuing the range. Okay, at a bare minimum, you're basically continuing the range. Because if I go in here into the 4-hour time frame, let me show you what I mean. Since the all-time highs, okay, this could be a W. This could be an X in a 3-wave structure. You have an A, B, C in W. You have a 3-wave structure in X. And this could also be an A, B, C in Y. So there's a chance that this is done for now. Okay? Or Y is not finished. This was your first 5-wave impulse. In an A wave, you form a B, and then you go down in a C. But the point being is you can get a larger relief rally to the upside where this structure for now is potentially finished. You can even come and claim this high, no problemo. Okay, it all depends on what's going to happen here more locally. Are you positioned? And I think it's always interesting to talk about these larger time frame scenarios. But does it make you money? That's the question. Have you made money even knowing the larger time frame scenarios? So I'm positioned in a long and I'm positioned in a short. I'm prepared for both scenarios. If price wants to continue here to the upside, I'm going to benefit from the momentum because I'm already in a long. If price wants to tank here to the downside, I'm already positioned in a short. Okay, so and that's the beauty about if you know how to do proper hedge trading. You're positioned either way and you make money because, guys, I'm already in profits with both positions. Okay, I can't stress this enough. For me, the most important thing is, have I made money even if I get stopped out of both trades? Let's say price does this. It bams me out of my long. It bams me out of my short. It just zigzags over here. Basically, it stops me out of both trades. Yes, I will still make money because I've taken profits already. That's just what I do as a technical trader. So yes, to answer those questions for the people that's asked me, this can be the end of something. But it can also be the start of a much larger corrective structure. So if I go here onto the 12-hour time frame, okay, just to wrap up the larger time frames over here. When you have a 3-wave structure, so you can count this as a 1, 2, 3, 4, 5, or you can count this as a B, C. You can count this as a W, X, Y, but this can still, it can be the end of something and maybe we go back to all-time highs, but it can also be the start of a much larger corrective structure. Because if this is a A, or this is a W, or this is a, what is the other one? A 5-wave impulse, basically a C, you could still form that and you could still fall down. Okay, maybe not to $10,000. That's absolutely insane, but you get the point. You can then form a B. You could then form a C. That could also be an X. You know, you could still continue the bear market, but there's bounces along the way. And from a day trading perspective, I'm just, you know, I'm taking advantage of the bounces and the drops. Okay, now let's dive back into the smaller time frame. 1 hour. Let's look at this structure again. So, okay, just to keep it very simple, when you take a fib from the low to the high, well, guys, there's, you know, just from a simplicity perspective, there's still a lot of room here for a bounce. If this is impulsive and this is corrective, you could still come and claim this low. You could basically form a larger three-wave structure and still get the bounce to the upside to come and claim this high. Okay, it's about, do you have a plan at those levels? Do you have a plan? Do you know exactly where to execute those trades and how to execute those trades? There is a scenario where price basically falls down. Sorry guys, I clicked the wrong button there. There is a scenario where this is the high and price falls here to the downside. It's not common, but it can happen. And the reason I'm saying that this is not common is because it's a repeat of the same structure within the same structure. So I can't give the scenario the highest probability where price absolutely tanks here to the downside. Okay, because it's very rare to see the same structure repeat itself within the same structure. It's just, and I'm a probability trader at the end of the day. Can it happen? Of course. That's why I have stop losses in place. Okay, but I have a plan at the downside. I do have a plan. If price does absolutely tank here to the downside, do you have your levels ready? Because I've got some monthly levels that looks very interesting here to the downside. So if price wants to continue here to the downside, that looks very interesting for me to look for along. Excuse me. Okay, the biggest move and the reason this zone looks so interesting for a long is because the biggest move with the highest amount of volume already took place inside of this structure. And it's extremely rare for price to just fall and repeat this within the same structure. So if it does fall and claim the lows, I don't expect it to go that far. And this is why these monthly levels look so interesting to me. Like if it does fall, okay, interesting longing opportunity. And basically the easiest way to trade it that I can explain, if you're not familiar with you know, your Fibonacci levels or playing swing failure patterns from specific levels, is to say that, well, okay, you have a low over here, okay? There's my magnet. Let's snap it on there. You have a low over there by the red line. Okay, let's take the monthly levels here out the way. It's the easiest way, okay, for me to see a sign of strength. If price wants to decide to fall here to the downside in the most bearish case scenario, I'm not interested in a trade as long as price is below this line. So if it wants to capitulate, let it go. If you're in a short, just enjoy the profits. Okay, but if you're no trade and you're looking for a long, this is a no trading zone. It's a no trading zone. You have to wait for price to start trading back above this level. That is a sign of strength, and now you know where to put your stop loss. Remember guys, I always teach everyone about the 3 W's. Why are you entering? Where is your stop loss? And where are you planning to take profits? And if you can't answer those 3 W's, you should not take the trade. It's a rule in my trading in my trading checklist. That's a rule. If I cannot answer all 3 W's, I don't take the trade. Because you lose money by not answering. Because you know some people enter a trade, they can't answer the 3 W's. It's just because they saw it on a signals group. I don't know, that person said he's going long, I'm also going long. Woo, it's dangerous. Okay, and this is basically, guys, in the most bearish case scenario, this is how I plan to trade this. If this wants to form a 1, a 2, a 3, and maybe that was the end of 4, and it falls here to the downside, the easiest way is you wait for price to get acceptance back above. That is a sign of strength. You know where to put your stop loss. Okay, stop loss has to be in place. That's how you protect your capital. Because if it wants to continue, you want to get stopped out. Okay, but that is a sign of strength, and maybe you can even come and eat up these highs once again. Even those highs, these are the biggest pockets of resistance. Okay, these consolidation areas. So that becomes TP areas. If you're long over here, that is definitely a TP1, a TP2, a TP3, however you want to manage your trade. Okay, but this could be an epic long. That could be a really, really great long. Not down there, there. Okay, there. Okay. Right, legends, I'm going to get into the 15-minute now. Please bear with me, okay? There's a lot of education that gets dropped here as well, and I'm hoping that, you know, by me sharing what I see on the chart gives you some perspective on how you need to apply this to your trading rules as well. Okay. Most bullish case scenario is that, like I've explained, you don't take the low. Okay. Price, maybe even, okay, we're going to analyze the structure now. Okay, maybe price doesn't even take this low. You have an impulse, you have a correction, and now we have continuation. Okay, like I said, and I feel like I'm repeating myself because the structure is still where it is at the moment. So there's going to be a lot of repeat over here. But, you know, it's going to sink in. Is when you take a fib from this pivot to the low, this is really an interesting profit-taking area for me from a longing perspective. Because I know 1, 2, 3, 4, that is a maximum fourth wave target. And that's usually where the fourth waves reject from a maximum perspective. It's already claimed the minimum target already. Okay, that's the maximum fourth wave target, because once this level is claimed, there is still a chance to do this and then maybe get the recovery back to the upside. So very interested in taking profits from my longs, but also very interested in shorts. But there's still a lot that needs to happen, and I think maybe, just maybe we'll get this move before the end of the, well, hopefully by this week, the end of this week, maybe we'll get some clarity. Well, you know, maybe the clarity is going to be that we fall and then we bounce. Maybe we're going to get the fall, okay, before we get the bounce, or maybe we're going to move up and finally reach this area that I've been eyeing for so long. Okay. Yes, can it continue? Like I said, guys, from a higher time frame perspective, this could be the low, and then price does this. It invalidates the fourth wave. But it does not mean when you invalidate a fifth wave to the downside, okay? When the 0.618 is claimed and you invalidate a fifth wave to the downside, it does not mean that you can't claim the low again. I'm just counting the structure differently. Because this could still be an A, a B, and a C. Okay, which is corrective. And this is a three-wave structure. This is a, maybe this is a A. Or a W. This could be a W. It makes more sense to be a W. But if it's an A, it's going to go much higher. Okay, it forms a B. Or an X. And it falls down and it claims the low again. Okay. But for this, yeah, I think if this is an A, B can extend here to the 0.9. It can even reach $94,000, $95,000. But we'll get there, guys. I'm going to be here every day guiding you through what I'm seeing. Okay, so now the interesting part is let's zoom into the 15-minute time frame. And for now, let's look at this structure over here. And obviously, guys, I will keep the community up to date. DM me the word access to get free access to our community for 2 months. Okay, just follow the instructions. Links are down in the description. Also, I think inside of the chat, I've pinned a message here inside of the chat. So on the 15-minute time frame, let's spend a little bit of time over here on the 15-minute time frame, because I think, you know, this is now where the focus is. Okay, we do have an impulsive structure here to the upside. whether it ended over here, whether it ended over here, you can count this as a 1, 2, 3, 4, 5, or you can count this as a 1, 2, 1, 2, 3, 4, 5, 4, 5. But it does look nice impulsive. You have basically a repeat, okay? Nice little move in the middle with the highest amount of volume, and then price chops, 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 chops until it loses momentum. Beautiful, makes sense. Okay, so if you have an impulsive structure to the upside, there's always a higher chance that you can form a higher low and continue and take out that high again. Okay, yes, some people are going to tell me, but Dewald, what if it's a C wave? We don't know. That's the thing. You don't know if it's a C wave or if it's a 5-wave impulse for continuation to the upside. The only thing you can do, okay, well, the best thing that I like to do as a technical analyst is, since the high was formed, what is this? Does this have a higher chance of being corrective, which means it's correcting the impulse? And a corrective structure is usually a messy structure. You struggle to make sense of it. It's very overlappy. Okay, that's the best way that I can explain it. It's a confusing structure. Then the probability starts to increase. Well, whatever is happening here most probably has a higher chance of being corrective, which means there's a good chance that you maintain the low, you form a higher low, okay, and you continue to the upside. So always interesting after an impulse to look for a longing opportunity, like the long that we are in at the moment. Myself, Andy, the community, we took that long together yesterday. Okay. Right. Now, we all acknowledge that this can be an impulsive structure. The question is, what is this? And corrective structures, ladies and gentlemen, because I know there's some ladies here in the live stream as well, can become and morph into something very complex. Okay, so let me go through those scenarios. Before I go through the most bearish case scenarios, let's talk about, well, what can this be the end? And we are going to now move up in a 5-wave structure again. Yes, it does not look pretty, but basically you have an impulse, you have an ABC and a W, you have a flat in a X, and now you've formed an A, B, C to finish up Y wave over here. What I like to look at is, well, since this low, can I count an impulsive structure? Yeah. That's the most important thing. Guys, I'm already positioned in a long and it's already protected. But if I want to see continuation to the upside, this is where it becomes very interesting. So now let's zoom into that structure on the 5-minute time frame. Okay, now this is where it becomes interesting. Let me open up the 5-minute time frame. So the only way in which I can count an impulse here, and maybe on the 1-minute time frame, there's, okay, maybe I should go into the 1-minute time frame and just look at that structure. I know, guys, this is absolute crazy technical analysis here on the 1-minute time frame. But yes, on the 1-minute time frame, I can count this structure as an impulse. You have a 1, 2, 3, 4, 5. No overlap between 1 and 4. Beautiful. So you can count this as an impulsive structure. So that could be your wave 1. Great. Okay, now let's go back to the 5-minute and go back in here. Now the question is, can we continue? Yes, we can continue. So I can count this as an impulse and this as an A, a B, and a C. Running flat, did not take the low. So it's a rare corrective structure. And the other problem that I have with a correction for this impulse, time. Okay, so let me zoom in over here and show you guys what I mean. Because, guys, I'm a probability trader. So, you know, I trade probabilities. And if the structure that's now forming to the upside does not have a high probability of being impulsive, then I'm still looking for shorts, even if I get stopped out of the short that I'm in right now. Okay, so if I take my time fib and I measure, well, from the start of this impulse to the end of this impulse, you can see that this correction is more than 8 times longer than the impulse. It's It's not great, guys. I usually, from my personal trading rules, I usually invalidate a correction when it hits the 4 and the 5. You have such a short impulse and such a long corrective structure. Okay. Then people are going to say, well, Dewald, what if it's a double 1-2? I know, people are going to say, well, Dewald, maybe it's a double 1-2. Okay. Well, a double 1-2, let's see. Where's my pen? So 1, 2. 1, 2. It did not take the low, so it's valid. Okay. The thing that does not look great here is look at how long this correction is compared to this correction. And usually in nested 1-2s, what you want to see is a 1-2. They become smaller, 1-2, and then it pops. It almost forms that little squeezing triangle. Okay. And so you basically want the more 1-2s the structure builds, they need to most commonly become smaller in time. Smaller impulses, smaller correction. Smaller impulse, smaller correction. Okay, and this, you know, guys, it's just from a probability perspective. Now you have a 1-2 and a 1-2. Okay, do you guys see the issue that I see over here? Okay, it's not time is never an invalidation, but it impacts probabilities. Okay, nonetheless, I'm just explaining to you guys technically what I see is the problem with just getting momentum here to the upside. But in a nutshell, if the scenario had to play out, what you want to see is a 1-2, okay, maybe a 1-2, maybe a double 1-2, but now you want to start seeing acceleration here to the upside to go and complete your wave 3. You want to see acceleration. And remember, if you missed the long, there's still an opportunity to get into the trade, but you have to let the structure reveal itself. I know, guys, I say this a lot. I know I say this a lot, and I actually get teased about it. Dewald's going to say the structure has to reveal itself. Yes, it does. Because if price continues to pump here to the upside, it rejects and it makes another high, and it starts slowing down and start falling to the downside. Well, now you have a 5-wave structure. So often what I pay attention to is that I don't actually care what happens here. I care what happens here. Because if I see a repeat over here of what happened here, I know that there's a high chance that this can be an impulse. And if you've missed the long entry, it is the retracement that becomes very interesting to look for along, to join the next move back to the upside. So if you miss the trade, there's another opportunity, but the structure has to reveal itself. Okay, cool. So technically, I cannot give the scenario the highest probability. Can it play out? Yes. Okay. So there is a count which supports the end over here. And I know some people inside of our community have shared different counts. And I just made a point inside of the community to say, guys, it doesn't matter how you count this. The most important thing is, okay, since the low, what is this? Because that presents the opportunity to continue the momentum to the upside. But the structure has to reveal itself. Because there's another scenario that I'm going to share now, is that price can still continue up here and fall down and claim the low again. Okay, and that's why the structure has to reveal itself. If you're looking for a long, for me, if you're not on a long from lower down and you're not able to manage risk, I cannot FOMO into a trade here. This is a no trading zone for me. Okay, but I have to highlight the most bullish case scenario is that this has to happen. You have to form a 1, 2, 3, 4, 5 or 4, 5. You have a correction, opportunity, you join the momentum. Now here, you need to see the same thing. 1, 2, 3, 4, 5. That's what's most important to me. Okay, and then if you miss the trade, there's a longing opportunity. But I also want to say that if price, regardless of whether this is an impulse or not, okay, now I want to talk about that level that the bulls needs to claim as per the title of this YouTube live stream. So let's take this out the way, because I want to talk about the most bearish case scenario that could play out over here. and it's this one. Okay, I need to zoom out a little bit for this one. Let's go here onto the 15-minute time frame. The most bearish case scenario that could play out over here is this little structure. Okay, I can actually take this out the way. It's nested 1-2s. So in this scenario, you're building up a 1-2, 1-2, 1. Okay, and this 2 that's moving up here should not claim this high at $69,000. Because this is the most bearish case scenario that I see from this pivot over here. And then price falls down in a third wave, high amount of volume, and it creates the choppiness at the downside, and it starts maybe reversing before it claims the low. That could definitely play out. We just don't know how aggressive. It can even fall further, and then it does that. Or it can fall a little bit further, and then it does that. You don't know how aggressive the third wave can go. The third waves can go to any 618 level, most commonly. 1.618, 2.618. They can literally capitulate to the downside. Okay, I'm just trying to keep it a little bit more realistic. Well, if I do, if I do see price moving down here and it slows down and it chops the lows, your double bottoms, your triple bottoms, it chops the lows. Okay, that is a sign of strength for me, and I will be very interested. After the drop with a high amount of volume, and you drop here and you start chopping and volume starts decreasing, okay, that is an interesting area for me to look for along. So worst case scenario, I still have a plan. I will get stopped out of my long, and I will look for a long over here, which is actually better, because if you successfully bounce here at the 786 without taking the low, there's a high chance you can still claim that high. So I will just have a better entry for this trade to benefit from the momentum to the upside. So I told the community this morning, the scenario doesn't carry a high probability, but it's one of my favorite scenarios because I love trading these structures and they play out often on Bitcoin. It's one of my favorite structures to trade. Okay, and according to my trading journal, is also where I make the most money, is out of these 4-5s, nested 4-5s. Okay, price drops, high amount of volume, and it starts chopping. That's my favorite structure to trade. Okay, so hopefully I'll get my way, maybe not, okay, because there is another bullish case scenario where this low is still intact. Guys, remember, the most bullish case scenario is that this is a 1, this is a 2, and this is another 1, and this is a 2. So now you have a double 1-2, and this looks way better because you can see the second 1-2 is smaller than this one. That's what you want to see in a double 1-2. So most bullish case scenario is that price forms a higher low and it rockets to the upside. Okay, but I'm showing you guys these different scenarios because depending on where price goes, I have a trading plan, and depending on what structure I see, I have a plan to trade that structure, and I will keep the community up to date. Okay, so in a nutshell, if I switch on my magnet and I take a little bit of a horizontal, the most important high that needs to be claimed, if I can just get it on there perfectly, is this one. Because what that means, if the bulls, take this out the way, can claim $69,228 here on the Binance perpetual chart. It might be a different level depending on which chart you use to do your technical analysis. But if the bulls can manage to push price up and take this high, okay, you invalidate this scenario. Which means, okay, as when I opened up the live stream, I said, which means that there's a higher chance, you just give the bulls higher probability. If the bulls manages to push price up here and you take that high, even with a retracement, there's a high chance that this low is protected because you invalidate the most bearish case scenario. So you could still claim the low, maybe bounce on the 786. When you take a flip from the low to the high, maybe, this is what's going to play out. maybe price pushes up there, it invalidates this scenario, but it then opens up the door that this is still a very interesting longing opportunity, and then you move up. So for the bulls, you want to claim, the bulls wants to claim $69,000, 228. That's the level the bulls needs to claim to give a higher probability that this low is protected. Because for the moment, as long as price is trading down here, chopping down here, it unfortunately has the potential to build nested 1-2s, and you're going to drop here and 4-5s. Okay. Hope that makes sense what I'm saying. Dewald, imagine we tap 44k in March and we actually bottom out. Q4, yeah, I mean, put on mascara. We don't know what's going to happen, right? We don't know what's going to happen. Any scenario and possibility can play out over here. But I'm hoping by me showing you the structures and how I look at the structures gives you some clarity in terms of, you know, how to look for shorting and longing opportunities. And remember, guys, I'm not a financial advisor. Okay, I'm just doing this purely for education and showing you how I approach the markets. So now I want to share this scenario with everyone over here. Okay. Not that one. Was it? I don't know if this one, yeah, this one got invalidated, guys. I was looking at this scenario yesterday and I shared this with the community as to say that, guys, maybe this is the top. We formed an A, a B, and a ending diagonal in a C. There was my invalidation. So this scenario has been invalidated, which means, okay, I was looking for a bounce. You guys can see where I was looking for a bounce. Inside of the green box. Okay, now we invalidated it. That was my invalidation. Price needed to fall down first before it moved up. Here was my invalidation, my stop loss. If price came here, that is my stop loss. 1-to-1 extension, fifth wave is not allowed to be the longest wave. Okay, and now this is becoming expanding, which basically means very rare. I don't even consider expanding structures because that's how rare they are. Okay. Well, that is basically a parallel channel, and that is why that's the invalidation. So maybe just to make it easy for everyone from an education perspective, in an ending contracting diagonal, it should not be a parallel channel. It should be contracting. And as soon as it taps the invalidation, which is basically means now it's becoming expanding. So it's an invalidation. So this scenario has been invalidated. So the only one that now still looks very interesting is this one. Okay, let me do this. This scenario still looks very interesting. So remember, guys, the most bullish case scenario is that you build a 1, 2, 3, okay? And this is the deciding moment. If it does, wait, let me redraw that. Let me redraw that for a very specific reason. 1, 2, 3, okay? If you do this, that is bullish. Even if it still rejects inside of the green box. If it does that. Okay. Because if it forms a 3-wave structure, it can be a B wave. If it forms a 3-wave structure, it can still reject inside of the green box and fall down in a C wave and then bounce at the level that I was been eyeing for so long. And then you move up. Okay, and I've purposefully put the trend in over here as well, where I basically connect the high to this little pivot. Because I know what could happen here. You get the fake out from a trend line perspective. Okay, let's just keep it simple. From a trend line trading perspective, price moves up here and it breaks out. And people are like, long baby, we're breaking momentum. Okay, and then you get that fake out that takes the low. And usually when you get a fake out, it takes the low. Then you get the bounce. And I don't know about you, but I've seen this not so long ago. I have seen this play out to perfection. From a trend line perspective, do you guys remember this? Okay, exact same scenario, but it's supported from an Elliott wave perspective as well. You get the fake out, and because price gets acceptance back below the trend, you take the low. And then you get the breakout. Very interesting. So you have the trend, okay, and this is definitely a scenario that could play out over here. You have your trend, okay. It either maybe it does this, guys, maybe it does that, and then it falls down. So it either breaks out or it doesn't break out. But I think there's a high chance for a fake out if it does. Okay. Unless price does this. 1, 2, 3. Okay. As long as it has a three-wave structure, there's always the chance to take the low. Always. But if it does that, now you have a 1, 2, 3, 4, 5. A, B, C, it bounces on the trend and then it continues. That is going to be my clue. But I will definitely be interested in a shorting opportunity there, especially if price stops me out of my short. Because remember, guys, I'm in a short over here. So if price forms a three-wave structure up, stops me out and starts trading back below, that is a shorting opportunity because you're not guaranteed you're going to get the 4-5. This could be an A, this could be a B, and this could be a C. Okay, it could take the lows again. Right, but I will keep the community up to date, guys. I'm in my long here at the moment, so and in my short. So basically, if I get stopped out of this short, I will still be interested in a short in this zone because I'm very aware that it could form a three-wave up, stop me out, and then reject again. Okay, maybe the higher low still maintains. Your three-wave up, 1, 2, 3, 4, 5 down. You take the lows. You have your trend and you play the breakout. However, or your SFP levels here to the downside. 786 value area low. I just want to see out of interest, where are we from a volume perspective? Let's do it from here. Yeah, guys, we're still trading below the point of control where the highest amount of volume was traded. You can see how we're struggling. We grabbed the liquidity, okay, and where I was looking for the short as well, but didn't break through. So this could still be a rejection zone. You have the trend, okay, this could still be a rejection zone, and you fall down. Then you tap the value area low because on my Binance chart, the value area low has not been claimed. I know on some exchanges it has been claimed. There's also a very interesting daily level still to the downside. Okay, maybe just maybe I'll get you. We'll get this. You reject at this daily level, together with a point of control. You fall. You have that fake out. You fall to the downside. Find support. Okay, SFP from the daily level, value area low, 786 when you take a fib from the low to the high. There's some confluence there, and if price slows down and it starts bouncing in that area, that could be a sign of strength. Okay. That's either a trading opportunity or you wait for the trading opportunity. Breakout, retest, continuation. So there's still a good chance, basically from a technical perspective, that this low can maintain. And this maybe forms a 1, 2, 1, 2, breaks out. Okay, but there's still a good chance we still have support to the downside. And I've gone through the most bearish case scenario already. So these are just local setups, guys. Very, very local setups. That is basically what I wanted to discuss here on Bitcoin, ladies and gentlemen. I know that there's a lot of other scenarios we can still consider as well. I'm trying to keep it simple, okay, from a simplicity perspective, okay, without going into Elliott wave theory. At least you should know some Fibonacci retracements, okay. You have a move up from the low to the high, you take your fib. You have support at the value area low of this entire range. You have the 786, you have a daily level. So that is the last level of support for this impulse. If price still comes down, it's an interesting longing opportunity. You can wait for the break of the trend, like what happened over there. Okay, this could repeat, guys. There's your fake out, you take the low, but you don't break down. You fall down, you grab the liquidity, stop everyone out below this low, and then you get the breakout that goes up. Fake out, take the low, breakout. Do you guys see the pattern that I'm trying to, because it's happened in the past, right? Like not so long ago. It happened, yeah, and it happens often. Where you first get the fake out, people long like crazy people, they put their stop losses below this low or below this low. Okay, price comes down, it gets acceptance back below the trend. That's usually a sign of weakness. Price should stay above the trend, and then you take the low. Maybe you bounce over here and then you break out. So it's basically this in repeat. Okay, most bullish case scenario, price just continues. Okay, most bullish case scenario, 1, 2, 3, 4, 5. The retracement, that becomes a longing opportunity. But I will keep the community up to date. If you want access to the community, guys, yeah, DM me the word access to get free access to my Telegram community. Okay, also if you want to trade with Bluffin, the exchanges that I'm using here, Bluffin, BTCC, where you get the biggest bonuses and incentives. Okay, BTCC 30% cash back. Bluffin, you get VIP status. I think they have another deal running. I just need to update the description. Okay, for those of you that are not trading with these exchanges, Valto, absolute one of the exchanges with the one of the exchanges with the lowest trading fees, even cheaper than Mexi. Okay, but it you need your wallet. This is, you know, guys, this is a decentralized exchange. Right, so now, still in the long on BTCC, still in my long and my short, head short. Okay, we'll see which way it goes. I'll manage the trades. I'll keep the community up to date. But now, let's go through some more comments. Okay, because I can just keep on talking here forever. Fixed range volume profile. Dewald, what indicator is that with the blue and yellow waves on the left? Oh, that is what you call, so it's the 1, 2, 3, 4. Fourth option here on Trading View, it's called the fixed range volume profile. That's what it's called. So what it basically does is, let me go here onto a larger time frame. Okay, let's clean up the chart, because you guys know more. If you're going to ask me a question, I'm going to educate you, because that's what I love to do. So when you use a fixed volume profile, okay, you basically want to see, well, okay, maybe you want to see, I want to see how much volume was traded in here and where was the most amount of volume traded. And that usually gives you support and resistance areas as well. So you can use this little tool and you can say, okay, well, I'm going to draw it from the low to where price is now at the moment. Click, click, okay. And then you will see it gives you these little waves. Okay, can you guys see the waves? It gives you these waves. Now, the bigger the wave, the more volume was traded. So you can see that when price was here, there was volume. When price consolidated there, it created volume. But here, where the red line is, it means inside of this entire range, this is where the most amount of volume was traded. That's basically what it means. And this is what range traders use to do range trading. Because this also helps them, a range trader, identify resistance, resistance, resistance. Depending on whether price is above or below the level, it's either support or resistance. And that's basically this tool in a nutshell. Okay. So you can do it for whatever you want. And, you know, I like to take the price action that's within the same range, because some people ask me, why don't you take it from the low? Well, here's price action that forms part of this range. In this range, I want to see where the most amount of volume was traded. Okay, and that's where the point of control is. So now you can see, well, this is interesting resistance. That's where price got rejected. This is interesting resistance. Price still needs to break through there. This is interesting support. Okay, price is now above that support or that resistance, so it's now flipped it into support. So there's a chance that price can now continue here because it's now broken through this little volume node over here. There's more support. That's where price bounced. That's basically how you can use this tool, because volume creates support and resistances. Hi Dewald, is BTCC 30% still available? Yes, according to my knowledge, yes it is. You have to, I think you have to deposit your money. You have to read the T's, and there should be T's and C's that pops up. Okay, you have to deposit your money into your features account or into the pro features or any of the features accounts, and I think it has to stay there for how many hours a day, maybe a day or two, and then you qualify for the 30% cashback that you can trade with. Okay. Any good scenario, we break the 60K low. Yeah, the 60K low is the scenario that I've spoken about. Okay, where this is nested 1-2s. Well, you talk about this 60, okay, but the most bearish case scenario is because even in this scenario, there's a chance that you don't take the low. You build nested 1-2s, you fall, and now the question is, we don't know, no one knows how aggressive this move is going to be. Because this move can fall and it can start to chop. But it's as soon as you see the choppiness where you take the bottom and you consolidate and you take the bottom, but it doesn't break down anymore. It just chops downwards. It takes the bottoms. That's usually where the bears are running out of steam. Okay, but if price continues to drop without stopping and it just drops and it drops and it drops, you have to wait for this. You have to wait because this structure needs to repeat itself. And we don't know how aggressive that can get. We don't know. So yes, this structure has the chance to take the lows. That is the question mark. And that's why if price had to break down here and it just starts falling like a hot knife through butter, there's nothing for me to do as a technical trader. I do not do anything until I see that. That's where I start becoming interested. Okay, now this looks interesting. Price is slowing down. Volume is slowing down. Because you want to see the highest amount of volume in that move. So yes, there's your scenario. But it might not, okay? When you take a fib from the low to the high, it could stop there at the 786. Could stop here. Maybe we have like a stops and it starts bouncing, 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 and then whoop, starts going back up. The question is just, we don't know how aggressive that's going to be. Okay, I do like the 786 of this zone because it also aligns with an harmonic pattern that I'm keeping an eye on. And I spoke about this yesterday. It aligns with this. But I don't know if this pattern is going to play out. That structure needs to slow down before I will consider any long in this zone. Because the way that I like to trade, okay, and it's my style of trading, if price falls down here and it doesn't slow down, I'm not going to long here when I see that. There's no chance. I want to see that. So price hopefully needs to slow down before it hits this level, because if price is going to just fall and hit this level, there's a good chance it's going to chop, 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 and then take the low. So yes, there is a scenario that claims $60,000. Unfortunately, okay, depends on how you look. I see that as an opportunity. Do you ever use indicators that show you key levels like Monday high, previous day low? No, I don't. I know that there are indicators that can give you that, but I'm a manual person. I like to put in my levels manually. I think maybe it's an old school thing. Maybe I'm giving away my age over here because I know maybe there's some cool indicators, but I like to, every morning I will go to the daily time frame. Okay, and I will go and look for my daily levels. Okay, there's a daily level, there's a daily level. So, okay. And then I go on to, every Monday, I go onto the weekly time frame and look for my weekly levels. And then every morning, I also go into the 1 hour time frame and I look for my point of controls. Okay. Using the session volume profile, this little bad boy over here. It's just to identify volume. That's all it is, guys. I want to see whether every day, this shows you each day. This is a day, this is a day, this is a day, this is a day. And each day it has a point of control where the most amount of volume was traded. And if there's one that's untapped, which there's nothing in this range at the moment except this one, I like to include them in my chart because they do get respected. And you'll see if I switch on my point of controls, the only ones we have inside of this range is this one. All of these ones has been claimed already. There's nothing here, nothing. The only other one here is to the upside. There we go. And there's another one here to the upside. So, and I call them naked point of controls because they have not been tapped, so they're still naked. Yeah, weird name, but I suppose it makes sense to me from a trading perspective. Okay, so I mean, this would still be interesting if price does this. It's still an area to pay attention to. You basically stop everyone out and it finds support. And then it goes. That would be interesting. But I will be ready. I will be ready. Okay, on the weekly time frame, are we on the third wave of Elliott wave? On TAS, I will leave the higher time frame analysis for another stream. Okay, because once I go into the higher time frames, I'm going to spend at least an hour and a half. Because it gets very interesting on the higher time frames. Okay. At what point do overlapping corrective structures stop being in information and start being curve fitting? Is there an objective invalidation or only alternative counts? At what point do overlapping corrective structures stop being information? I'm not sure I know what you mean by your question. Renewal man, I really want to answer you, but I really don't understand your question. Okay. I mean, you guys, if you're inside of the community, you can ask me anything. You can share pictures with me. You can share your technical analysis with me, because it's not just me in the community. We have some very, very knowledgeable traders inside of our community as well. It's myself, it's Andy, it's Dylan, it's Joan. I see Joyce, Elliot. Knowledge is also picking up. Like, everyone's just, you know, studying inside of our community over here. Crypto, what? No, this is the talk. This is the chart. Where's the chart? Chart talk only. Guys, you can see everyone sharing their analysis, asking me questions. I go back. Okay, yeah, I mean, Mr. Joan here is a really good Elliott wave counter. I mean, look at the scenarios that he's sharing over here, possibilities that could play out. Okay, like he's now pointing out over here, this could be a triangle and a Y wave. Very interesting. You formed a W, an X, and a flat, and now this is your A, B, C, D, E, and then you move to the upside. Definitely valid. So Mr. Joan loves the small time frames. He's really good at the smaller time frames. Mr. Joan over here. He's also in our community. He might be here in the live stream. I'm not sure. Okay, but he's always helping people out, sharing his analysis, different scenarios. Sometimes he sees things that we don't see because he focuses on smaller time frames. He's also saying, yeah, for the bulls, okay, yeah, maybe a contracting diagonal here to the upside. 1, 2, 3, 4, 5, correction, continuation. So you guys can see, if you want the alpha, it's all shared inside of our community, not just by myself and Andy, by some of the amazing traders that's learning how to do this properly. Right, I have unfortunately run out of time. Thank you so much for joining the live stream. Remember to smash up that like button. If you want access to the community, DM me the word access, by the way. Okay, DM me the word access to get free access into our Telegram community. Follow the instructions and we'll let you in, and I'll see you inside. Have yourselves an amazing day. Until the next one, cheers for now.